How you doing, mate? All right?
OAT, how are you doing? You okay?
Yeah, good, cheers, mate.
Good. How are we doing, mate? You busy with work?
Yeah, not too bad, cheers, mate. Yeah, I haven't been doing much trading for a while, really, so I just decided to sort of jump back on and get a little bit more analysis over the weekend, so I'm quite looking forward to next week.
Yeah, cool, man. This BRICS thing's been taking a lot of people's attention, I guess.
Have you been on, what's that?
This BRICS thing's been taking a lot of attention, I guess, from people.
Oh, yeah. Yeah, I'm still stuck on, like, just feeling like whatever the right strategy is and just trying loads of different things, but I mean, the banker just seems like there's more pips in it than most.
Yeah, it's good, mate.
Like I'm almost starting to get a handle of my risk management as well, a little bit better now.
Yeah, it's important. Yeah, very important. That's what I really struggle with in the start, mate, to be honest.
Just being full on strict with it now. It's what 1% and stuff. Not bother me if I lose 1%. That's what I'm just trying to get my head around now. Just
yeah, it is. I've got more on. Sorry to keep you guys. Look, you know, I got home, a little boy was up, so I sort him out as well. So let me share my screen. So I don't know where you're all at, but I'll do I guess there's a few of you just starting out, there's a few of you that know some or a lot of stuff, but I'll just go through what I usually look for and then we can break it down, but feel free to stop me if you want whenever you ask a question. So usually now between 10 and midnight really on a Sunday evening, I will do my analysis for the whole week. And then just break it down from there. So not very often I start on the daily. So I've got my rules up at the top here. So number one will be top-down analysis. So on the daily, I don't really usually trade this pair. Just I was looking through them early on, and it seemed to work out quite nice. Look quite nice. So AUD NZD. This is so daily. What we're doing really is on the high time frames. It's just getting a pure bias of true price direction. So we just want to know which way the price is going. Obviously, we can see here it's clearly pushing downwards. Yeah, a downward trend overall. Yeah, so it's more so of where we want to end up. Okay, so on the higher time frames, which is what the banks do love, and they work off that. They really don't care at all about the 1 minute, the 5 and the 15, so forth. For entries, we do use them, but for overall analysis, you know, let's just think this is London, let's say, this is Birmingham. We need to understand how to get from there to there. Yeah, and we all know it's not as simple as one straight line, is it? So we need to understand how the market moves, what obstacles are going to get in front of us, and so forth. So that there is a typical mistake of what a rookie would do, or a trend trader. Yeah, so they would enter pretty much, say they entered here of this one, and they would have really typically put their stop loss above the previous high, or the other way around. If we entered here, yeah, that's a good example. So if we entered here, and this is what I used to do. I used to trade this. Yeah, so you're looking for your trend line. Let's say it's not the best example, but yeah. So if we were going to enter here, for example, sell here. So our stop loss is in the dark grey. We've got our stop loss above the previous high, which would be this one. Yeah, so take profit would be down here. Yeah, previous lows. Okay, so let's send this to the back. If we entered off this green candle here, where that pink little circle is, what happened is literally that we were in a little bit of profit. See the green candle, just this one here. And then what the banks did was obviously pushed it up hard, took everything out. That's your FU candles up here. Here you've got Q candles. Yeah, take them all out and then drop as it would have, and as the people who your Joe blogs, me, 18 months, 20 months ago, was getting very, very, very frustrated, thinking, for fuck's sake, I've just been taken out and now it's dropped for some reason. I just couldn't get my head around it. Why? So obviously that's the bank's prime example, doing manipulation. And if we look here, what does this wick line up with? So if we've got a line on this wick here, last up before the down move. Okay, so it's come back up to this here, pin perfect, mitigated out of this and dropped. Bear in mind, this is on a daily time frame, but the analysis is still the same. So that's a prime example of what the banks do. Yeah, so they know millions, if not billions of people and money, trillions and trillions of money are sat here, yeah, in stop losses. So they take the people out on purpose and then drop in the way these people wanted it to go. But they rob these people basically first, thanks very much for your money, and then drop. Yeah, so that's what we're looking for really. And that's how they manipulate and they control the market. So, but yeah, daily time frames. Let's just delete everything for now. This. So you don't really need to put, you can if you want these yellow lines, but we can clearly see at the moment it's pushing downwards. Yeah, we've got a high, a low, a lower high. So this has not broken above this yet. Hopefully it doesn't, because we would be looking for sells here. So yeah, and then we've got lower high. And this is where I used to get confused. I was thinking, well, this one's higher, this one's higher, this one's higher, this one's lower. Where do we go? So it is a bit of a strange one, because this one is the issue, because this one is higher than this one. But this just confirms. So if this was the highest, obviously, let's go. This would be an uptrend, for example. Yeah. So you've got a major and a mini uptrend, by the way. Yeah, so obviously the major one would be downwards, and then within that we've got mini ones, which would be stuff like this. So here we've got the mini one pushing upwards. So how we know we're still in the major downtrend is because this here has not broken this level here. If it did, yeah, we'd be looking at this would be up here. We'd obviously have a pullback for a lower high and then to push up again, but that did not happen. Okay, so the market structure, you just sometimes have to wait and see what happens. So, and then it was definitely confirmed with a new low. Yeah, this is lower than this. And then we've got now is lower highs, yeah, all through here. Yeah, a lot of wicks, but they're still obviously all lower highs. This is a lower high because this one is the highest point before it. So it's a lower high. And then obviously what we're waiting for here, what I'm thinking of waiting for is a pullback, which I will cover in a minute, and then drop down, maybe even further. Yeah, so it's quite strange actually. We could be looking at something like this as well. Yeah, so it's just, but bear in mind this is, like I say, on a daily time frame, so it could take months, weeks, if not months, to do all this movement. But still, we need to have a roadmap, if you like. Yeah, when you leave the house, you know where you're going. If not, we get a sat nav out and we set out the postcode. We know where we're going. But overall, to me, it looks like a downward direction. Yeah, lower highs and then we've got lower lows here. But like I say, this could be just a pullback, and until these highs are broken, we're still in a downtrend. Yeah, we'd want these to be broken, yeah, past, above, and the candle needs to close above it, not just wick and drop down. Remember, the body is the most important part. The wick is just a distraction from true price action. Okay, so this to me basically is just a pullback. So what we do have is a flag. Yeah, so we've got a flag pattern forming here, an upside down flag. Yeah, so see it here. So this is our flag. Terrible drawings. So yeah, imagine it, you've got your flag is upside down. So this is just a pullback. And what we should be seeing is price doing this now. Yeah, pushing down. And then now we've got a new flag. So we've got this flag going on from there to there and then there to there. Okay, so now we've got this one, this flag. Yeah, so that's the daily. So I don't really use it that much, but what you need to be doing just on a daily or the 4 hour, they're quite close to be fair. It's just marking out the last down before the up, or obviously the other way, last up here before the down move. Okay, because that's where we overall want to get to. We can take 3, 4, 7, 20,000 trades in between here, but the overall final destination would be, you know, these are all the blocks. So these are that's the last down there before the up move. So the banks are in drawdown. Yeah, so it's typical a quick down and then a quick up move. Yeah, so that's typical the bank move, that is. This one's perfect here. Straight down, straight up. Yeah, so that there would be a perfect place to be taking people out. Yeah, taking liquidity again, where we're going along. Yeah, so if we were taking the trade, where does our stop loss go? Below this previous low. What's the bank done? Straight down and straight back up. Yeah, so this is now the last down before the up. So, well, it's not as of yet, because this here is our last down before the last up currently. But just imagine these last downs or the last ups. Just imagine them as balloons. Okay, have they been popped? So this one here has been popped. See the wick? Twice actually. So this wick here and this wick here has popped our balloon. Okay, so it's still a POI, point of interest for us, area of interest, but just remember it has been mitigated out of. So the banks have got their money back from it. They've broken even or made profit from it. So they could come back to it. You may see a small rejection of it, but this one here is clearly not been mitigated out of yet. Has it been popped? No. Yeah, so our balloons, just use these as balloons. That's the way I've been taught. Yeah, so this one here, so let's mark it out. Open of the body and 50%. Okay, so usually I do it by eye. Yeah, none of you are stupid enough not to know how to do that, so I won't teach how to suck eggs. Yeah, if you want to do it properly, or teach somebody that doesn't know, use a fib. I wasn't far off. Yeah, mark out 50%. So it will give you the 50% ratio on the fib for you. So just mark it out, top of the body to the bottom, you know, on the fib, and obviously 50% and 50% of the candle. You can then delete that. So now, what's going on? Thanks. What happened there? Anyway. Open 50%. So now that's our one of our areas of interest. So overall direction, we want to end up down there, yeah, or there, or that one, yeah, either one. So it's just, again, going back to driving, it's an easy analysis. Just imagine you're driving, we come to a roadblock. Is this strong enough to hold the price action? Or is it going to plow through to here? Yeah, so at the moment, I'm not overly fussed because my trade, I'm looking to take from here down to, firstly, this area, that would be TP1, take profit 1, and this would be take profit 2, and then I'd be looking for buys from there. If and when we got there, I'd be waiting for it to do a distribution or accumulation, so sideways movements basically, and then wait for it to create new highs, come back to that area and then push up. But if it just breaks through, then obviously I know I'm going for this one. So mark these out, yeah? If you double click on the lines, put a text in there, so I know this is the daily IC, institutional candle. Yeah, so on the right then, I know what it is. So just leave them in there. Because when we drop down smaller time frames, you're not going to be able to see that, because this is on a daily, remember. From there to there is a lot of pips. Yeah, 190 pip move from there to there. If you're putting a standard lot size on that, that move there should get you about £1,900. Yes, but obviously don't be doing that when you've only got 300 quid in your account. Just make sure you're using risk management correctly. So we just need to identify where is the last down before the up. So we've got this one, which is small, which is fine. It doesn't really matter. There's still, oh, actually, I just missed that one. So yeah, we've got another one here. Okay, has that been popped? No, not yet. Slightly, but it's still not been popped. Okay, it's not come to that area. And this again is where I used to go wrong. I was like, oh yeah, that's fine, that's close enough, because let's drop it down to the 4 hour. Let's see. Obviously within that now, that daily candle there, we're going to get another one somewhere. Yeah, so now it's moved. So this is the 4 hour, the daily here, isn't it? But this one below is the 4 hour. And again, just learning, this is what I used to do. I used to go off the higher time frames. I used to enter off the daily, which is fine as long as you're using risk management. But I was doing then, which is what I do now, is try and get a tighter entry. Yeah, because what we've got here is a not bad 20 pip stop loss. Okay, but if we went off the this one here, the 4 hour, that's the last down before the up move. Can we get it tighter? Yeah. Now what's that? So now that's a 12 pip or 13 pip stop loss. Okay, so that's marked out as daily. We can, just for example, to show you guys, let's make that yellow. Don't get confused. And then we've got the 4 hour, which is this one here, and 50%. Let's drop that down to the next one now, so 2 hours. Okay, is there another candle that we can go off? Yes, the candle has moved again. Yes, so we're getting an even tighter stop loss. So this one is the 4 hour, and this one is the 2 hour. So see. Oh my god, this thing's doing nothing. I don't know for fucking life. So okay, how tight can we get that stop loss? So it's moved not much, but 11 pips stop loss now. Okay, so let's. This is what you need to be doing, is breaking it down and breaking it down and breaking it down. But just remember, if you're using the 4 hour daily, which again is totally fine, yeah, just make sure you're using risk management, because if you've got a big stop loss, you don't want to be using 3, 4, 5, 6% of your accounts. But now we've dropped it down to this. Yeah, it looks like it's been popped. When I say it's been popped, there's always a chance it'll come back to it anyway, which is fine. Okay, so this one also, because this really was last down before the up move. This candle has come in, needle popped it. Yeah, so they say it's not valid, but it's still an area of interest. And what it is a key level. So we're sat at 53.50. Yeah, so that area is a key level of this one. 52, they're about 52.250. 250 is there, yeah. So the 4 hour is dead on a key number. Yeah, so going back to your key numbers in your quarter theory, basically, yeah, 05, 250 is a perfect quarter theory number. So it's crazy how all this sits together. So we got that line in early on, this black one here, that was on the 4 hour. Yeah, so that sits on the quarter 3, which is powerful as well. So let's break it down to the 1 hour. Is there another candle within? We are here. That's a tiny little one there now. Yeah. So this is still valid. Okay, so now we've got that there, and our stop loss is just below here. Let's see how much that is placed on the movement. So our stop loss now is, entry was here. So our stop loss now is 7 pips. Yeah, so let's say beforehand we were sat at about here. So this was a 6.6 to risk to reward to 1. So we're risking £1 to get £6 back. Yeah, or £10 to get 60 quid back. Depends on your lot size. But let's move this now and see what happens to the 6.66. We're now playing with double. Yeah, so we're now risking £1 to get £12 back. I know which one I prefer. Yeah, so
just on that, Jace, quickly. So what you're saying is you'll come down and wait for that 1 hour one instead of the other one because you've got a tighter stop loss on it.
Yeah, really, mate.
Yeah.
Before taking the buy, yeah. So that's just an example.
Because it lines up with your hour.
Yeah, well, and then you can break it down even further. So what I will do is let's talk about what I'm actually looking at. These are just take profit areas, really, mate. You know, and from there, if it does roll out and it looks nice to buy from there, then I will, because obviously we know that the market goes up and down. But really, what they are is just so my if I'm taking a trade from here, my first take profit would be short from there, previous high.
Oh, okay.
Down these lows here. Yeah, my second one would be, so I twin trade. So I'll put 1% risk on this one, and then I'll put another trade on. Yeah, and I'll put it down to here. So now, if it comes in, that's nearly 9% growth, and this is 12% growth. Yeah, so it's pretty much what 21% growth of 2 trades. And if this one comes down and hits TP, great. Yeah, I've taken money off the table. I'll take at least 80% off the table, partials, and pay myself along the way. Yeah, and then let the less run. So we move our stop loss into stop profit. I would even move it to like, I don't know, to here maybe. Yeah, and then obviously if it does come back up, we're still, I don't know, let's say we took off 300 quid from the table from there to there. Yeah, and it comes back up here, we're still going to maybe earn an extra 40 quid or whatever it is. It's better than obviously hitting our stop loss. So this one would still be running. I'd do the same with this one as well. Yeah, I'd move the stop loss to here, and then obviously leave whatever was running. Hopefully our analysis is good and it's going to hit TP there down there. We get maybe an extra 100 quid out of this and this one. Yeah, so that's just managing your trade really.
The entry then on that, because that's going to be what you're working out for take profit. Because I was looking at it as the other way. When it come down to that, I was then going for a buy for what you're talking about. But your entry then, have you just taken them off them top candles? Yeah, in the same fashion, but the other way around.
Yeah, the daily and the 4 hourly, I don't really pay much attention to it at all, to be honest, because there's a guy I used to follow quite a lot. He will hold trades for about a month, so he needs to know where the overall trend direction is. So he'll be holding from like all the way up to here and expecting it to come down to here, whereas I'm happy to take out. I aim for 200 pips a week. That's it. Yeah, so I could do that in maybe 2 trades, even maybe sometimes 1 trade. Yeah, so what I'm looking for is I typically work a lot of the 1 hour, the 2 hour, and then lower time frames for entries. So here, what we do have, is just start marking stuff out like this though, is all the way through there, we've got equal highs. Okay, so they need to be taken out at some point. So this is a liquidity area. There's a lot of liquidity sat up there. What liquidity means, if you don't know, guys, I don't want to insult anybody, but I don't know where you're all at, is there's a lot of stop losses sat up here, okay? So people are taking trades, and where's their stop loss? Above this previous high. If you entered here, is above this previous high. If they entered here, above this previous high. Yeah, not this one because it's not higher than that one. So this is your previous high. Yeah, so if we entered here, it would be that previous high. So let's say we were entering here. So what we're waiting for is the banks to come back up to take this liquidity out and then drop. Yeah, so we just need to be aware of all these things. But what I think is going to happen first, because we can see here we've got liquidity sat here, okay, in this area. Yeah, so we can clearly see here we were in a huge uptrend. Yeah, so high, low, high, low, high, low, high, low. It's just pushing up and up and up and up. Yeah, so these are now your mini trends within also the bigger picture. Yeah, so actually this indicator, by the way, higher high and lower low, if we put it on, it will show you all the lows and the highs. If you want to grab that off the indicator. So we can see here high high, higher low. Look at that. I've marked this is an old chart perfectly. Come exactly to, that's the perfect example of, look here now, that's been popped, hasn't it? Yeah, this balloon, remember, last down before the up move, has been popped by this one, but it's still come back to mitigate from here. Yeah, I missed this. I didn't trade it, but that would have been a perfect trade, yeah, for a buy. Yeah, so that is a perfect example of, but it's popped the balloon for us. Yeah, so how we know it was a buy, because this here has created a new high, which means we're now in a bullish market, yeah, upwards market. So it's broke structure from here. Yeah. If you wanted to obviously go down, we'd be looking at price action, candles down here, but it didn't. Obviously it wanted to go up, it told us it wants to go up. What they did, they left this stamp here, this balloon, on purpose, yeah, pushed up, created a new high, came back down to mitigate it out of there, then we take a buy from there. Okay, so this is where it gets not confusing, but you need to be a little bit more switched on, because that the smaller time frames, yeah, you do get a bit lost in it all. But this is where I do a lot of my analysis. Let's just turn this off for now. Okay, so obviously price is here now. Yeah, so the market has opened. So we could even just come to here, because really what we're looking for is the last up before the down move. So in theory, this is the last up before the down move. So it could possibly just come up to here and fall. So we've got something marked out here. Yeah, so here we've got the last down before the up move. So just that's why I was saying earlier on with the daily and the 4 hour, it's important to mark them out, because these are key areas where the banks are going to target. They want to get down to here because they're in the drawdown. It's like us in an overdraft in the bank. Yeah, so we've got £1,000 overdraft. If we go over it, obviously it's we need to pay it back. Yeah, so this is just us basically working our ass off. Just imagine all this price, these candles is our us working, and then we finally come to the peak, which we've spent £1,000. So now we need to start paying it back. So here we came down, we paid 200 quid off, we're down to 800. We paid an extra 300 quid, we're down to 500, down to 200 quid. So yeah, and we've got 200 quid left to pay the bank. When we get down to here, we're now back to zero, back to no overdraft. And that's what the bank's doing. They're in major drawdown here, you see. So they will do this, we all know, on purpose. It's to push price up, to manipulate what they want. They rule the banks basically. Yeah, so they're in what they'll do here is they sell here and then buy, so they're hedging against each other. Yeah, so obviously this sell in this here, they're in drawdown. They don't have enough time to close the trade because it's so fast and it's so much money. They have to push price up very, very quickly so nobody can catch on to it. So all this here, they could be in 100, 300, 400, 500 million pounds of drawdown, but they can obviously they can manage to do that. And then as soon as price comes back down, you know, they're, let's say 400 million, 200 million, 100 million, 50 million, zero. So they break even, and that's what mitigation is. Yeah, that's what we call it. They mitigate out of this position. So they close that trade, that sell. Yeah, and obviously the buy, they've got a buy on. So obviously they've made loads of money here. Yeah, so let's say they walked away with 100 million here. They bought up to here. They made profit from there to there. But obviously when they were up here on a buy, let's say it was 100 million, they were in negative equity of 500 million, let's say. Yeah, because they put a sell on down here. Because so they're working against each other. It's a bit like a scales. Yeah, so it's negative. So, but when they come back down to here, they've taken their money. They've taken the 100 million off the buy, off the table. So they're up 100 million. But now they need to come back down and mitigate out. Yeah, all that 500 million. So look at the bottom left, what we've got and what we always see on a Sunday. This is what we're doing now. So yeah, let's make this bigger so you can see it. Yeah, so on a Sunday, we mark out the charts and identify gaps and points of interest. Okay, so that would be last down before the up moves, any imbalance, any gaps in the market where price action is not. So on a Sunday evening, sometimes you get a massive gap where prices jump so quickly. You will get literally a gap, yeah, just white blank, no candles. So that needs to also be filled, as well as IPA imbalance. On a Monday, we will always see a retrace or a rebalance of the previous price action. Okay, so all of this is obviously last week's price action. Where's Monday? Who can help me what the date was on last Monday? It was the 28th. So let's find the 28th. 28th of June. Let's go 8 o'clock, 7 o'clock in the morning. So from that orange line, all this here, up and down, 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 down. We will now see on a Monday, typically, not always, a retrace. So I want to see price come back up to retrace and fill all this price action in. Yeah. It doesn't matter really that there's no imbalance there. It still needs to be balanced. Yeah, because remember my shitty diagram, when we're building a house, we need a wall, we need a ceiling. What else do we need? Another wall. So it's just the same here. This is our wall, not straight, but it's a wall. So obviously we need another wall. Okay, so it still needs to be filled. Yeah, irrelevant of if there's IPA there or not, imbalance. So yeah, it needs to retrace and rebalance. Yeah, so ideally it needs to come up. So this was last week's high. Okay, so we can mark that out as a high. We've got Tuesday week, Wednesday weekly high. Was that Tuesday, Wednesday, 29th? Yeah, there you go, 29th of June, check your calendar. That's last Tuesday. Yeah, so a weekly high. So always on a Tuesday or Wednesday, we always get a weekly high or a weekly low. Okay, so that is the weekly high. We won't typically, usually, unless it's major news, go higher than that. So if we're in an overall trend direction, which we have already realized that it's in a downward trend direction, it shouldn't be going any higher than this, really. It may do, because we've got highs up here as well, but usually it shouldn't. Okay, so just mark all these things out on your chart. Yeah, leave them there, because when you go back test all this stuff, you can see where you went right or wrong. Yeah, there you go. So Tuesday we should see our high or low for the week. On the Wednesday, midweek reversal objective. So what we've got on the tomorrow, on the Monday, we need to have a retrace to fill up usually most of this. Yeah, and then the Wednesday we'll have a reversal. Yes, obviously up to here, and then what we'll have is typically, yeah, we take our sell usually on a Wednesday or a buy, obviously. Yeah, and then on the Thursday, so it depends if you want to hold it this long. On the Thursday, you should have a push into the weekly trend objective. So let's go back to the daily. What we were looking for was what the last down before the up move, which would be down here or this one. So Monday we get a retrace back up to here. Tuesday yeah, we should have a weekly high or low. And then on the Wednesday and Thursday, we see the big pushes, yeah, up and down. That's why people don't trade Monday and Fridays. Yeah, they only typically, the big boys, they only typically trade Tuesday, Wednesday, and Thursday. Yeah, so nothing wrong with trading on Monday and Friday if the opportunity is there and it all fits in, you can take the trade. But a lot of people won't trade because Monday is just it traces, yeah, and it's just settling, the dust is settling after the weekend, and then Friday is slowing down for the weekend because obviously we know the market closes at 10 p.m. Okay, so we're waiting for a retrace or a rebalance for last week's price action tomorrow. So through the night tonight and tomorrow, come back up to the weekly, because that was last week's weekly on the Tuesday, remember, the 29th. Yeah, and it will hopefully. So this again was something I learned. I used to just take the trade straight away from there and bang straight down. What used to happen? I used to take the trade, and so remember, not all these will work. Yeah, what would happen? It would come up to here, retrace slowly, and bang, straight through. So you have to wait. So now I wait for, I don't know, 35, 40, sometimes 1 hour, maybe an hour and a half, to see what price action is doing. Yeah, I will break down something on gold in a minute. If it's not too late, I don't want to keep you guys. For entries, yeah, on the 1 minute or the 5 minute, I'm waiting to see break of structure because there's no point me entering something when it's just going to plow through. And again, that's something I've learned. Yeah, I used to just go in, jump heads first, take the trade where it just wanted to plow all the way through, and it just took me out. So it's just obviously we know patience is a big game. So here, that's why this one is across here. See, so I'm waiting for a price to do this. So we want an up trace to here. So this black line is there because if we drop it down to, let's say, 30 minutes, is anything there? No, nothing so far. Let's move this to the side for a minute. Okay, let's drop it down to 15 minutes if there's any candles there. You got that one there, but let's see if we've got anything else. Drop it down to the 5 minutes. Is any candles there? There you go. What's that there? See there? Last up before the down move. Okay, and I've marked that out because it's our weekly high from last week. So hopefully it shouldn't be going any higher than that. If it does, tough shit. We just lost 1% of our accounts. But if it comes in, let's go from that trade. Short, and this is now getting a tight stop loss. So where was our stop loss? Look how tight this stop loss is. Above that high. Okay, so that now is only 22 pips. 2.3 pips, which is amazing. I used to take trades with 40, 50 pip stops. Okay, so we just break it down, because yes, we can go off the 1 minute, the 1 hour and the 4 hour, but really what they actually want to get at is where the price is. The lower time frames, they're more accurate, but you just need to be a little bit more careful. If you're not overconfident, and I'm not still yet, I'm more confident than what I used to be, but if you're not overly confident, give it an extra, I don't know, a few more pips. Yeah, 5 pips is literally nothing. As long as you're using correct risk management, as long as that is 1%, that is 1%. If you're telling the calculator that you're giving it 14% and you're telling it 1%, it'll calculate out that 1% for you.
What calculator do you use then? Because of I think I need to.
I don't know whether you can
just put it in a small lot size at the moment, but I want to get it bang on before I actually try to take over the world, you know.
Here you go. So this I use it on my phone. I think it's easier. Let me check if this works. So my FX book. Click on calculators. Does it work? Position.
So Jace, have you got a raw spread account now then, or because obviously with a two pip stop loss, you ain't gonna get that on a leverage here.
So yeah, there you go, mate. So just click on that. Yeah, whatever I showed you then. Calculators, position size, and then what we were trading, AUD, NZD. So find AUD, NZD, account currency, mine's in US dollars. My account size is 26,000. Yeah, so risk is 1%, so I'm risking 1%. My stop loss is, let's say, 3 pips. Yeah, trade lot size is that. Let's see what happens. Yes, there you go. So the risk is 260 quid. Yeah, because that's 1% of the account size. Okay, so I don't know what units is. I think this is why I didn't like using it on.
Don't you have to put in the prices of the trade? Do you know what I mean? Because what I'm getting at there. Right, hang on. Right, I got you.
So
you put in, well, you put in that.
That's my lot size there now. 12.3 standard lot sizes. Yeah, so if this goes wrong, based off a 3 pip stop loss, based on 12.3 lot sizes, if it goes wrong and hits my stop loss, it's calculated out for me at 1%. I'll only lose $260.
What's that? And like £120 a pip.
Yeah.
Mm.
So just use that, and so just make sure you're using correct. Because let's say we go off 3%, it's obviously now gone up to $780, which is quite a lot. It's still not a huge amount compared to the account size, but still, I don't want to be losing 780 quid. And when you get a bigger account size, you don't mind using only, like some of the people that Sean follows, they only use 0.01 of their account size, but they're trading with like 10 million fucking account size. So as soon as you get the bigger lot sizes, you say, that's, go on, mate.
Where it says trade size lots for there now. So
I don't know what that means, mate.
Yeah, that's what I'm confused on. Look.
Yeah, I just left it at 1. So on the phone, on the app, on the phone, on this my FX book, it doesn't ask for lot size, trade size lots. Right. So just use it on your phone, mate. It's easier, I think. Calculators. Mm-hmm. So yeah, that's what you get on your phone. Can you see that? Yeah, so it's pretty much the same basis. So currency pair, amount at risk, stop loss, and then that's it. It just gives you your lot size straight away.
Right.
But you can do it on here, I guess. That's about right, isn't it? Obviously, it's worked out right. So because obviously 1% of bollocks risk. Yeah, 1% of account size would be $260. So it is right. So just leave it as 1 if you want to use it on here. I didn't know what it was before.
I'm trying to work out where I'm looking on the phone now. Where do you put how much money you got on your account now then?
It is like a tab on it where you can. So the third one down. It says amount. Where the fuck's that gone? You've got to change it. So see here, there's a tab, risk by risk fix amount or risk by percent.
Amount to. Okay.
These here, these tabs.
Yeah. Right.
Change it to risk by percent, and it'll ask you for your balance. Obviously, it'll work it out for you.
Right. Yeah, I got you. So yeah, well, last trade I done on this, I done one before, 42 pip stop loss. I don't know.
Yeah, it's fine, mate. As long as you're using 1%, it'll work it out for you. If I go back to that now, if I was using, so instead of 3 pips, 43 pip, do you say, yeah? 43 pip stop loss, calculate. My lot size has gone from 12 now to 0.86, but the risk at stake is still 260 quid, dollars, because it's 1% of the account size. Yeah, so if your stop loss is let's say, I don't know, 23 pips, calculate it, it'll change the lot size for you, but the money never changes.
Yeah.
This is where risk management is very, very important. So that's what I'm saying to you. If you're doing it on a 2-hour or 4-hour daily, just make sure you're using your proper risk management, and it'll calculate it for you. let's say we're taking a trade from here now. My take profit one would be down here. Yeah, back to these lows here. So if we entered at the top, I'd be going back down to these lows down here. So this would now be a nearly 22% growth on my accounts. Yeah, because it always targets the previous lows, because the price is going to do this overnight, or maybe tomorrow, Tuesday, we enter, it's come back down to previous lows. Yeah, it always does, 99% of the time. Take profit two would be possibly to fill this imbalance here. So we've got some imbalance in this area here. We can mark this now. That would be take profit two, and then take profit three would be probably down these lows here. Yeah, it's just whatever you're happy with, you know. It's I closed a trade last week, and it wasn't even hit my close to my take profit one, and it was 866 quid. But you know what, fuck it, it was about 3 hours of a trade, and I closed it. So, you know, I don't know why, but recently I've grounded myself massively. I've blown 7 accounts. It's about time I fucking give my head a wobble and start getting some money back. So
what about go on, sorry.
Go on, mate.
I was just this order blocks I was talking to you about the other day. With what how do you purchase that, Jeff?
I'm still trying to find. I found them, but I'm just waiting for the reply off them, mate.
Oh, right.
Yeah,
No worries.
I'm on to it, mate. Don't worry.
I'm just trying to give myself a bit of an head start, you know.
Yeah, you can do it obviously without, but it's a little bit more hard, isn't it? It identifies it for you, so all the hollow ones are last up before the downs. But yeah, the order block, let's take that off. All you can see is just that, so it does make it a lot easier. But yeah, just like I say, just be aware of this here. So yeah, when it comes to there, you just got to wait and see what it does. Yeah, so when it comes to here, so this is based on the 1 hour. We marked it out. Yeah, so it possibly just could come up to here, but if we took a sell from here, I'd be targeting this imbalance in here. See the green line? So that's still an 17% growth on the accounts. Yeah, so what I'd be waiting for is if we take the trade, like for example, where can we find one? Like here, that's a perfect example of how not to go in. This is what I used to do. So here we can see the last up before the down move. So it came back up into this position to mitigate out of it. Yeah, so ideally we were wanting for this to happen up into here and sell off. But this is what I used to do. I used to go in straight away. But what did not happen here was no break of structure. Yeah, so these candles here did not break on the 1 minute time frame. Did not break. Yes, you may be losing. I don't know, what is that? 2 pips, 3 pips? Yeah, 2.7 pips. You're risking losing 2.7 pips. But am I glad that I checked? Because what happened? It went the wrong way. I would have lost that trade if I got into it. So on the 1 minute, on the entry, it's come up to my black line. We would have marked it out nicely and tidy, waiting for this to happen. Let's see how stop loss was there, whatever. Yeah, let's go down to there. Nice 8 to 1 nearly. Yeah, so let's just watch. Remember, it's only on the 1 minute. It's pretty much the same as trying now. We're sitting there for 1, 2, 3, 4, 5, 6 minutes. Yeah, then I realized, shit, it's gone through. Yeah, so I wouldn't be taking the trade really until it's broken structure. Yeah, it's just giving me an extra edge to know it wants to push down. It wants to go down that way, because this is just market structure, which I would highly recommend all of you getting up to speed with. It's very, very important. Break of structure would be a low is broken here. We'd get a pullback for a high, then a new low, a high, new low, high, and so forth, because we all know price does this. Up, pulls back, yeah, up, pull back, up, pull back, up, pull back, and obviously the same on the way down. You can see here, down, pulls back, down. There's a major, obviously here is pushing upwards. So here we'd be seeing this, wouldn't we? Yeah, profit.
What do you do? Wait for the second leg, Jace, is it?
Not a second leg, I just wait for a break of structure, mate. So these candles here, yeah, I'd want this candle, all these candles here to break first before entering on the smaller time frames. Whereas before, I would just get in up here. So I would have been in, I don't know, 2 pips of profit. But what happened then? It went back the wrong way and took me out. So you just have to wait for a break of structure before entering. Yes, like I say, you're only risking losing 2, 3, 4, 5 pips, but you know you're better off waiting and entering correctly and getting a win rather than entering and gaining 5 pips, but you're not really, because you would have lost, don't you? So that's what I do with entries. Yeah, and again, that's something I've just sort of learned the last 2-3 months, really. So what we're looking for, this was on the 5 minute, isn't it? Where the fuck are we? Up here, yeah. So also what we're looking for is, do we have any imbalance to fill? Because it's more probable for it to come up and fill. So far, there's nothing at all here. Yeah, so where's the order block? So number 1 we've done. Number 2, where's the order block? IC candle. So that's just the last up before the down move. Where is the price and what is price doing now? So that's more so of when you're getting to entry points. Yeah, so you want price to come up to this area, pull off, come back to fill the imbalance, because it doesn't really want to leave it any obviously imbalance. The wick will usually come up. Obviously, if it goes through, then forget it, don't enter, because it's pushing through. If it comes back up slowly to fill this, for a perfect example, let's go back to here. Yeah, so what's this done here? Yeah, last up before down, what's this wick done? It's come up to fill the imbalance. So if we took that wick away, there would be imbalance there, wouldn't there? Just like here. Yeah, so there's no wick either side of it. So there's imbalance there. It needs to be filled. Yeah, so that's what I mean when where is price and what is price doing? What is it trying to do? So identify break of structure. So typically you should be doing this on at least the 1 hour, the 2 hour, or the 4 hour. So let's go to current price action. Yeah, so we have, let's fucking delete everything. Let's get my yeah, so we had break of structure here. Yeah, through here. This area here, so this here is your break of structure. It's broken all of this. So it's broken. So what does that mean? We're trying to push downwards. Yeah, we're in a downward move. But just bear in mind it will come up to here, breaking structure again, to mitigate out of whatever that was. The fuck, I lost that now, haven't I? I think it was up here, wasn't it? Come up to here to mitigate out for us to sell down to here, but because this is broken structure, if it does break structure, we now know that it wants to change direction. So therefore we'd be looking for buys from down here, back up to this area. So you can work both ways, yeah? You can take a sell and a buy. but just for now, just concentrate on one.
So when it breaks structure now, see behind with the circle, it's broke structure to the upside, haven't it? Right. So you jump in into the cell as it breaks structure, do you know?
No. So if
Where would you enter that then?
so here I'm looking for,
On the spike up, is it?
let's go on a 5 minutes. So there, I'm waiting for a price to come up to here, 76.37. Yeah, there's 5 minute candle here, but just bear in mind, obviously, the overall trend direction on the higher time frame, which is very, very important, is down. Yeah, so let's go on the 1 hour, let's say. Yeah, so it's broken structure here. Yeah, so it's pushing down because here, what we were seeing was really an upward trend. Yeah, and whereas the first break of structure was here. Yeah, because this was the previous low, we've got now a new low, we've got a newer low, and there's nothing that's broken these highs here. Yeah, so this did not close above this high here. So now we're in a change of direction. Yeah, so therefore, I've marked out my last up before the down move on the smaller time frames, but my higher time frame bias is overall downwards. Yeah, so it's always more important to go for the major higher time frame. And again, that's a perfect example of people who trend trade will be looking at sort of this setup. Yeah, what they'll be waiting for is for price to come down to here, back to this yellow line and sell. Yeah, so they'll be putting their sells in here, a stop loss above the previous high. What happens then? The banks literally wipe them all out, come up all the way up to here to mitigate out of this, and then drop. Yeah, which is fucking annoying. It used to be until I knew what the banks were up to.
Yeah.
This is what we're looking for. Yeah. So this here is basically called trend trading, because on a trend you need a minimum of 3 touches, 1, 2, slightly close, but possibly here this could be a third touch. So 1, 2, 3 touches, and then that is a confirmed trend line. Yeah, and then they would be selling from there. Your typical Joe Blogs who's learned off YouTube would be selling from there. That's trend trading. Yeah, but the banks will literally wipe the floor with them. So we're looking, remember, for the 5 minute up here. Yeah, the fib does not fit, because I can tell you just from looking at it, there's nothing that fits. Yeah, the 89, the 78, and 71, which is fine. Doesn't always work. I don't typically use a fib that often, to be fair.
Can I have a look at your settings, just on your fib, please?
Go, mate.
Lovely.
Got it?
Yeah, thanks.
So what else we got? Yeah.
I'm off, boys. I'll catch you later.
Hi, buddy. Tommy.
Cheers, mate. Ta-ra.
Fibs, yeah. DOT number 9 trend. So obviously we've identified on the higher time frames that it's pushing downwards. Imbalance. There's no imbalance to be seen. Point of interest. So that is typically on the higher time frames. Engulfing candle. Okay. So engulfing candle is where this down is bigger than the up move, because this is the up and that's the down. Obviously vice versa. Same you can see here. This is the down, this is the up, but that's an engulfing candle. So it's bigger. Yeah, the candle is bigger. Same here. Yeah, so my first roadblock would be this one here. Let's delete this. Okay, so I'd be waiting, so I can set an alarm just below there now. Set an alarm, create. Yeah, and then as soon as obviously this will happen through the night, so I'll miss it anyway probably. but it'll come up to here. It may not do. You know, the Asia session we're in now, it may come up to here in the morning. It may come up to here and drop. Yeah, so I just have to wait until it gets to that area, and if it rejects nicely and creates new lows, I then look at taking a sell. Okay, so if it goes through here, if it pushes through here, if it stays around here for 2, 3, 4, 5, 10 minutes and pushes through, then where's my next roadblock? Where's the next speed bump? This one here. Remember, on the higher time frame, you can't see it. That's why it's important to drop down to different time frames. So that's on the 5 minute. Yeah, so mark it out. So we're just waiting for, but going off the rules about each day, remember, which is down here. Daily objectives. Yeah, so going off the daily stuff, on a Monday, we need to have a retrace and a re-imbalance of last week's price. Obviously, we spoke about this early on. This is last week's price. So we need to come back up to retrace of all this price. So I doubt it's just going to come to here. Yeah, so I would imagine you may get a tiny small sell-off, but really nothing major. It's come up to here to fill all this in, remember, and then drop. Yeah, so that's what I'd be looking at. Engulfing candle, did the institutional candle take out liquidity? It certainly did. That's a great move. Yeah, so again, there'll be liquidity sat there. Yeah, did it take out liquidity? Yes. So that wick alone took out liquidity grab. Yeah, so that was your FU candle here. Because the typical retail traders have put their stop loss. There you go, just above that one there, which is the previous high, this purple one here. Yeah, what has that candle done? Fucking, it's mad when you look at it. Literally, we call it an FU candle, fuck you, and the banks have dropped. And that's why it's important to identify the engulfing candle, because they do it so quick, the price is pushed down so quickly as well. Yeah, so it's just added confirmation to identify the engulfing candle. What else we got? Does the particular move break structure market? So yeah, did this move? So when this happened, so when this went up and then went down, did it break structure? Did this move here break structure? It did. Yeah, it broke structure here. Okay, or even this one, it broke structure. So that whole move there broke previous structure. Okay, so that's just another added balance of the banks doing that on purpose. Added benefit. Signature move is no, it's not a signature move. I won't cover that now. It's too late and it's too long. Wyckoff, definitely won't cover that now. But it's very, very powerful. Maybe we'll do that on maybe I don't know, Tuesday or Wednesday. Usually check the higher time frames, which we've done. So if you're looking on the 1 hour, I want to be at least looking at the 2 hour and the 4 hour to see where I'd like to end up. Okay, so zoom out. Remember, we've got this one here. See the last down before the up move. Obviously these here. Okay, so we've got a tiny bit of imbalance in here. So we could be looking to fill that in. So if we were to take a trade from this risk reward will be mad. If we got down to there, that is that's a big move. That's a 70% increase on your account because our stop loss is so tight. If you're risking 2%, that'd be 140% increase, more than double your account.
You never let that run overdue.
Say again?
You wouldn't leave it run like that overdue?
I'd leave it run down to here. So here would be 46% growth. I would take partials from here. So whatever I worked out early on was 3 pips, wasn't it? So 12 standard lot sizes. So I would close, let's say 10 of that 12, and I would leave 2.3 running. But my stop loss would be very, very tight. Yeah, so if it did come back up,
Yeah.
it'd be a risk-free trade. I wouldn't be losing anything. Yeah, so just pay yourself on the way down. Like Marvin said earlier on, that's £120 a pip. Yeah, and we're moving fucking how many pips? So this trade here is 64 pips. Who's got the maths? 64 times 120. 120 would be £7,600. Yeah, just from there to there. Yeah, so I would be happy to take off, let's say, 5 grand worth of stuff and leave the 2,600 running and in profit. If it did come back up to, say, let's say here, and it took us out, maybe we'd walk away with an extra 400 quid, which is fine. Yes, you got to think, oh shit, I've lost 2,600, but you've also secured the bag of 5 grand, yeah, because you've taken partials. Yeah, so it's just, don't be greedy. But if it went all the way down to this imbalance down here, it may go from 2,600 to, what's that, pretty much double, isn't it? So an extra 5 grand basically. Yeah.
When they say take partials, how do you actually take partials? Just
So on your MetaTrader 4 on the app, you can click on close and change the lot size. So just change it from 12.3, whatever you want to close, it will tell you.
You can close so many pips.
Yeah.
Not pips. Whatever you price you come in at. So if I come in at, let's say,
yeah.
If you come in at one lot size, you can take it down to 0.50, say.
Yeah,
God,
Do you know what I mean? Take it down to 0.25.
Yeah. So just secure the bag. Like last Friday, I fucked up. I actually fell asleep. I was 280 quid up on gold. I didn't move my stop loss. It fucking took me out. Yeah. So if I was awake, I would have taken maybe 200 quid off the table, let that 80 quid run. Yeah, and maybe it would have gone the wrong way. But maybe I would have then secured 200 quid. That 80 quid, yes, it would have been nice for that 80 quid to turn into an extra 200 quid. That 200 quid, I've got to think, I did it. It was literally like 4 minutes it took me to take the trade. So it's fucking amazing money, you know. You just got to think.
Did you have a good week last week, Jace?
Yeah, not last week. Between last week and the week before, it's just shy of 3,000 pounds. So it was pretty much my best week ever last week.
Right.
So as we have, 20, 50s and 80s. So that's pretty much just the bank's levels. They love playing with 20, 50s and 80s. So I mean 72.50, yeah, 72.80. Them levels, it's not the end of the world. But if you do spot it, like 75.20, so zeros, 7,500 dead, which is quarter theories, 75.20, 75.80, and 75.50s. Yeah, so anything 20, 50s and 80s that ends in them numbers, they're typical what the banks like to play with. Yeah, that's what I'd be looking at. Waiting for AUD NZD. So just see how this works out. So that's the 4 hour, 1 hour. That's the 1 hour. So here, that's the last up before the down move. Yeah, so we could possibly looking at a move down to here and then to sell off, or we could be looking at move up to the top and then sell off. Yeah, so you just got to wait. Yeah, that's the only thing with Forex, you've got to wait. You wait for the alert to go off, make sure you put your alerts. It's obviously going to come down to here because it's in balance in there to start with, so it has to come back up to fill that in. You see in here, so it's imbalance IPA through here. There's a gap, there's a naked candle body there that needs to be filled. So price has to come up and fill that in. Okay, so we can mark that out. IPA. Okay, so now we've got this also needs to be taken out. That is internal high. Yeah, so obviously we've got our higher highs and higher lows. That is an internal high. So
What's that mean?
Between here and here, that is the most current, recent internal high. Yeah, so within your move, in your range, basically, you've got an internal high, and there's another one here.
What does it actually mean, though?
It just means that it's pretty much the same as liquidity. There's liquidity sat there.
Right. It's made by the banks, then, is it?
Yeah.
Is that what it means?
Yeah.
It's like a double top. Was it tweezer top? Is it something like that's called?
Yeah, that is a double top. Yeah. So it's just basically this liquidity sat there, mate. But yeah, internal high, it needs to be taken out because it's the same as internal lows as well. It just at some point when, I really don't know, it needs to be taken out because there's money for liquidity sat there. The bank wants it. Greedy fuckers. Yeah, so this here, this one here, the up before the down, that's been and gone because this has come up to mitigate, and this one here has been to mitigate. So that's why we're not looking at there. So when we drop it down to the 15, do we see anything? Not really, because this here, this green candle, has it been mitigated? Yes, by this one here. Yeah, purple's come up in perfectly into that green zone, into that green candle before the down move and dropped. You could have traded that. Yeah, but now we're looking at the 5 minutes because it's still not been mitigated out of. There's nothing so far that's come up into here to mitigate out of this. So the banks are in drawdown now. They're in their overdraft. Yeah, so they want their money back. So that at some point, it could be tomorrow, it could be Tuesday, it could be fucking next August. Yeah, they have to some point come up to this area to break even to get their money back because they're in drawdown. Yeah, so that's why we're looking at that area. That's our POI, point of interest. Fuck, I've got a dry throat. So I won't keep any longer, guys. We've been with over an hour. So I know it's a lot to take in. Maybe we can break some more stuff down a bit slower and concentrate on different numbers.
Could you copy your rules and send them to me, please?
Yeah, no worries. I'll put them in the chat now.
Yeah, thank you. And also that your Sunday, so Monday. I quite found that quite interesting. Actually, that
Yeah,
Monday
I didn't know that
Wednesday
about 2 weeks ago, mate. Yeah, I learned that about 2 weeks ago, and it's massively helped my trading.
Yeah, I'm gonna sort of back test some of that and just that sort of see. Yeah, it's gonna be quite.
So what you kind of do, Jess? You kind of potting around on the markets on a Monday, and then like towards the end of Tuesday and Wednesday and Thursday, that's when you're trying to get your 200 pips, is it?
Yeah, it's mainly, mate. Yeah, just fanning out on a Monday. If the trade is there, I'll take it. You know.
Oh yeah.
If it comes up to there for some reason by tomorrow, 4, 5, 6 p.m., I'll take the trade.
It also matched what I was doing with that. Obviously, when I was looking at the DeLorean stuff, because they say trade them Tuesday, Wednesdays, Thursdays as well, and the same principle that they just said like Mondays is just analysis day, and and then Fridays you've had all your profit out from the week, so Friday is just your chill out day, ready to sort of get your head clear, ready for the weekend, so you're not thinking about trades all weekend. So it's just the same.
Yeah, most definitely, mate. So if we can say, for example, make $1,000 on Tuesday, $1,000 on Wednesday, on Thursday, $3,000 in a week, you got 4 days off, guys. So it's fucking powerful shit. We just need to understand it. Yeah, there's a lot of
game plan. That's what we're trying to do. I tell you what helped me mind that what I was watching the videos is like where I was trying to predict the market is the probabilities in it. So now when they look at them over probable cause, I find that I'm seeing things a bit different now.
Yeah, that's all it is, mate, and that's why I sort of worked out my rules. The more you can take off there, the more probable it is to come in. If it's a bit like if you got fucking 11 bloody Leo Messi's on the field against 11 shit bloody Leeds players, it's more probable who's gonna win. That's what we're doing, really. It's
if it don't work out, you've lost 1%. That's it.
That's where I nearly lost my mind quite a lot of times because you lose 1%, but if that came in, I'm fucking up 69%. Yeah, so that's where the massive difference is between HFX and Forex. Even if we've just fucking took it like I don't know there, I'm still up 5%. Yeah, up 5% of a £26,000 $26 account is plus 5%, 1,300 in 4, 5, 6, 10 hours.
And that's nothing in pips, is it? That's fucking
hell no. It'll move that in an hour.
Yeah,
it's one candle, isn't it?
Yeah, it could be, mate. Yeah, you look at fucking gold, mate. If you're gonna trade gold, please be careful. It moves that fucking very fast. Look at that massive candle there. These green candles here. There you go, look at that. I was doing it's just because I moved it, isn't it? Yeah, so and then on the smaller time frames, which shouldn't really be telling you this, but you can then start stacking. Yeah, so like here, this now, watch this now, it'll come down to here, there you go, bang, straight away. See that candle, it'll come down to this little candle here now, and back, it'll go up. So that's what stacking is. But you've got to be very quick and very, very, very confident in this. I've done it about 3 times.
How do you get your stop loss right then, Jace?
Right under there, mate. It's literally right under there. It's so tight. It's them that it's not really a trade, mate. It's more of a risk, to be honest. And if it works out, it works out. If you don't, you're losing. I would only put like 0.01 on these, you know, and I would only take it up to, you know, maybe up to here. Yeah, but it's just more of if you've got like 2, 3, 4 standard lot sizes on it, you're just playing around really. You know, you're risking about 80 quid, something like that. If it comes in, you made about 300 quid something. Yeah, so
In minutes.
yeah.
So the other traders were saying you should have a couple of accounts as well. You should have your play account because we all have a tendency to not play by the rules, and then any profit you get from it put into your main account. So
Yeah, massively.
Try to keep that sort of mentality myself now. Yeah,
so from there to up there, why up there? Because that's the last up before the down move, so it's going to come back up to there. Remember, this is on the 5 minute. The concept works on every time frame, but obviously the higher time frames it's better for us. It's slower and it respects it more. There you go. It should bounce now. It may come to 50%. There you go. You've been profit right away now. So it's come literally perfectly to that body, open that body. Yeah, take the trade. You're doing a little bit of profit now. There you go, even more profit. So it's obviously price is pushing up. And you entered here. Fuck, it's absolutely man. And look how pin perfect that is. If we put a line right through there now.
The way the banks move the money though explains so much stuff, doesn't it? You know, like the strategy.
And you work off fibs, mate. When the fibs work out, they're pin perfect, like 79%, 78%. Or different levels, to be honest. Right, I'm gonna stop talking. I'll be here till fucking 2 AM.
Yeah. Listen, Jason, an absolute star, but you know I love him.
Thank you, mate.
No worries, guys. I'll speak to you soon. Recorded, so I'll be on.
Just last one, Jason, really quickly. Them hollow candles, and is that something which you can get, or is it difficult to get them?
I'm working on it. I paid 50 euros for it off a company.
Oh, okay. It's an indicator that you paid for. Got it.
Yeah. Well, Adam got it, and he fucking sent it over to me. We went house on it.
Yeah.
I don't know whether I can copy and paste the code to you guys, or whether they'll know that it's been sort of used multiple times.
Yeah, for sure.
So I've sent them a message just asking and explaining, so I'm just waiting for a reply back. Yeah, they could have another one, you know. Indicator, what's it called? Order block. Find. Let's try that.
Don't worry about it now. We'll just have a little look. But yeah, just was. I heard you mention it earlier. Just didn't know.
Yeah, no. So we'll sort it out sometime.
Cool, mate.
Yeah,
nice
this
one.
is recorded, guys. So I'll stick it on YouTube. You're gonna watch it back because, like I say, it's a lot to take in. So yeah, I'll speak to you soon. Thanks, guys. Bye bye.
Catch up in a minute. Cheers, mate. Bye.